The interest rate is what a borrower is charged for the use of a lender's cash or money capital. So it is important to understand the difference between fixed and variable rates. We'll go through some disclosure statements to show you some of that level of detail, fine detail. But first off, fixed rates are great in the fact that the rate is never going to change. Your payment is not going to change. So you have a sense of security with that fixed rate. Some folks also like variable rates. So variable rates can ebb and flow with the market, up and down, which would also mean that your monthly payment could change, maybe quarterly, monthly, or yearly, depending on the loan that you borrow. So it really is up to a borrower to decide what they're most comfortable with, as well as comparing the different rates that are out there. So we'll go through that today as well. If you are considering a variable interest rate loan, you do want to make sure that you know what the cap is on that interest rate. So how high can it go? Most variable rates do have some sort of cap, but the cap can be quite high. And they're usually tied to an index of some sort. So I'll show you in disclosure statements where you can find that information if you're considering a variable rate loan. Now, above and beyond the federal direct student loan, which many students have in their financial aid offers, and they're borrowing that federal direct loan, which is where we always recommend that families start with the federal student loans first because it is financial aid. But above and beyond that, there are also additional loan options for families that can help pay for the rest of what financial aid isn't covering. So your cost of attendance minus your financial aid offer. That is what we're really trying to cover today and what these loans would be for. So any type of alternative loan, the Federal Plus loan is a parent loan for students. So we'll talk a little bit about that. The MEFA loan we'll talk a little bit about, and that is an alternative state-based loan. But there are options out there, so you do want to do your research. Above and beyond the federal direct student loans, most alternative loans are tied to your credit in some way. So for the approval of the loan, we'd be looking at the co-signers and the student, their credit and minimum credit scores, for example. Also, the repayment option that you choose might affect the interest rate as well. So I'm going to get into that in a little bit more fine detail. So really, the further you push out repayment, the more it might increase the cost of that loan, as well as maybe a different interest rate. So you do want to pay attention, and we'll go over this, the full range of the interest rates, not just that lowest advertised teaser rate that most families might not get unless they have a very high credit score in the 800, 850 credit score range. So you really want to look beyond just the lowest advertised rate.